Good morning, everybody. Welcome to the Flow Show, Tuesday, the 16th of July. I hope you're all having a good morning so far. Morning, Kay. How's your morning?
Hey, morning, Ryan. Yeah, the morning is going all right, mate. Morning, everybody. Ready for another day.
Yep, let's see what fun and games we've got today. Bit of data out today, which should keep us on our toes.
Yep.
So looking forward to that. We'll look at that in a moment. Right, let's see what's going on. PBOC still fixing in the 713.28, up from 713.13 yesterday. Seeing a bit of an uplift in dollar China this morning. We do have this plenum stuff, whatever you want to call it, going on. There is a piece that some big US executives, banks and financial institutions are apparently going to be jetting out to China next week after this stuff is all over to get the lowdown on what's going on. So that might indicate that China is wishing to maybe calm things down in terms of trade and opening up and that sort of thing. And maybe they want to get some of the big US banks and institutions involved again, or get more involved, because obviously there's been a lot of offshoring, shall we say, out of Chinese assets. So maybe trying to encourage them back in. We shall see. For the moment, dollar China not doing an awful lot, just swinging around really what the dollar's doing, risk and the like, but we're yet to hear any real comments from this plenum. So that's a big risk, headline risk for this pair anyway. Coming straight into a bit of data this morning, we got had some zoo data coming out, and things looking a bit better-ish. Economic sentiment coming in at 41.8, beating expectations, but still down on last month. Though current conditions have improved in terms of being less crap than they were last month. They were expected to get worse, falling to minus 74.8, but came in at minus 68.9. So it's better than the rubbish minus 73.8 last month. So call it an improvement of sorts, shall we say. Bit of data from yesterday in the US. We had the Empire manufacturing numbers coming in, and a little, again, it's another bit of an improvement, but sorry, it actually got worse. It came in at minus 6.6, was expected to improve to minus 5.5, but it came in worse again. Some of the underlying measures still not looking overly great. Employment stayed negative at minus 7.9. Prices paid ticked up a tiny bit, though is showing a bit of an easing trend, as were selling prices. Over in Canada, we had it's called the Business Outlook Survey. So it's a quarterly survey run by the BOC, just gauging opinion and thoughts and expectations from firms. The overall outlook index fell to minus 2.9 from a prior minus 2.4, but the interesting aspect of that was that a lot of firms and businesses reduced their inflation expectations. 12-month inflation expectations falling down to pretty much where the Bank of Canada's target range is. The BOC have a target range for inflation of 1 to 3%, and now those 12-month business expectations are in that band. That's following also from a consumer survey they run, seeing the same things. So after that, we've seen rate cut expectations for next week's meeting rising to 80%. So that's the odds for a cut coming next week. Now, as mentioned, we got Canada CPI data today, so that's going to be important. Could cement a potential cut next week. CPI hasn't got the expectations on here, but expectations are for it to drop to 2.7%, and then some of the other measures coming down a pip or so, or staying unchanged. Keep an eye on this BOC core measure as well. It had a big drop between March and April, falling to 1.6, and it bounced back to 1.8 in May. That goes down a good chunk. If any of these numbers come down a decent amount, it's probably going to cement a cut next week. We'll see those rate expectations rising. But if we do see hotter inflation, unless it's really hot, like we're busting back above the prior numbers going into 3%, it's probably not going to move the needle too much on a cut. So heavy expectations at the BOC cut next week. Any thoughts on the old syrup swiggers, Kay?
No, well, nothing more, I would say. We know that Stephens is a cutter. Rogers is probably going to try to do her best to hold him back from doing it. But if we get a lower inflation print, it's all but done, I say. But on the other hand, he did say that they are okay to diverge from the Fed, but he also threw in a little line saying that there are limits in the divergence. So could that hint that even if we get a lower one today on the CPI, that they may hold back? The problem is if they hold back next week, it's going to take them all the way into September. So they may actually do a pre-summer sale and cut it next week. And it could very well be, because it's also a projections meeting, so one of the more important ones. So I think it's if inflation comes down, it's probably good enough to expect a rate cut next week.
Yeah, very much so. And that I think that divergence limit that they've been talking about. Obviously, I don't think it's going to be there after one cut, but yeah, we may get a bit more information on that. If he says they've still got room, then they're going to be looking at more cuts. But if they say that the divergence limits are already met, then it's potentially going to keep them on hold. So that's probably going to be one of the more key lines to watch out for next week. But
yeah, and that's probably where Rogers comes into play. I think as well, because she's traditionally a bit more hawkish than Tiff. So that's where she may have something to say in the debate about the divergence and trying to keep things closer to the States, because they did cut already once. So if they would cut again, I think they are now at 4.75. Is that correct? Would bring them down to 4.5, which is a bit of a ways away from where the Fed is, and even where the Fed could end up this year. So yeah, that could limit the movement at the Bank of Canada.
Yeah, very much so. It's just as long as I get to use my Stiff and Rogers pun next week.
Yeah.
I'm looking forward to, as always. It's my little immature moment for the Bank of Canada. Got to enjoy them while they're there, though. Right, moving on. We had Fed Powell out yesterday, and by and large, not anything new. A few repeats of what we got last week, says the labour market has moved into better balance. He said some more progress has been made on inflation in the second quarter. And says the last three inflation reads are at a pretty good pace and add to confidence. However, he won't send any signals today on any particular meeting. He used that line last week as well. Then repeated that if the Fed waits for inflation to reach 2% to cut rates, it has waited too long. So it's a repeat of a lot of central banks that say they won't wait for inflation to get to target before they start cutting. The question is, where is the line? I think the first start is all CPI measures below 3%, and then we're probably looking around about 2.5%. If inflation's tapping that number or tickling just under, then we're probably firmly in cut territory. He then added, always good to add a comment after the fact, says he always felt there was a path to lower inflation without the kind of labour market pain typical of past tightening cycles. He says a hard landing scenario is not the most likely view now. He also said, talking on the political side of things, that he will stay in office until May 2026, but declined to say whether he would still be there for another term after that. That's what's going to come into play once the US election is sorted. Anything you picked out from Powell yesterday, mate?
Walk the same line. That's how it came over anyway. he did find it useful to say, I'm not going to give any signals today, but whatever he said will be taken as a signal, right? So
Yeah.
It's always funny when a central banker says that. But yeah, just continuing the same line, didn't say that they had more confidence compared to literally what, two days before or 3 days before when he was talking. Yeah, it's just holding the same line. Nothing really new to take from it. Just confirming. Well, I mean, if you want, it's perhaps what he didn't say, and he didn't fight back against any expectations. Let's put it that way. That stuff is going their way, but it's still nothing new. He's just not fighting against it.
Yeah, very much so. I think that's the way. And Kevin says he likes his breakfast meetings. So just saying, so he can have his afternoon snooze after, get the work out of the way, and go for a little siesta. Right, we also heard from Fed's Daily, who said confidence is growing that we are getting nearer to 2% inflation target. Some normalisation of policy is the likely outcome. And she says, I see a policy adjustment over the coming term, which is clear as mud. Moody's, they're not happy with all the banks getting in on the guess the Fed cut game. So they're out with a little note saying the Fed could begin policy easing with a 25 pip cut as early as the July meeting. They expect the Fed to cut rates by a total of 50 to 75 pips in 2024 and another 100 to 125 pips through 2025. So basically saying they see 2 to 3 cuts this year, 4 to 5 cuts next year if we base that on 25 pips. They said the test is that officials want to be confident inflation is moving down. I wonder how they came to that conclusion. And that more good data will add to confidence. And lately, the Fed has been getting that. And someone probably paid them several $100,000 to write that baloney. Anyway, speaking of rate cut expectations, we're now pricing 50 basis points of cuts, 2 cuts for the BOE for 2024, according to markets. And over in politics, Biden is going to apparently unveil a plan to cap rents. This is coming up potentially at the GOP convention when it starts kicking off there. So rents, housing, that sort of services, components of inflation have been a real thorn in the Fed side, a thorn in the US side. So he's going to potentially put a cap on rents. Whether that helps with inflation or not, I don't know. Probably going to be too little too late, as there's already been signs that those metrics are starting to creep lower again. But that's politicians for you, shutting the door after the horse has bolted. Any other news, Kay, that you got? It's been a bit of a quiet one on the news front.
Yeah, it's been quiet. I mean, just a thing on the plenum, and I'm not sure whether I am on the side of the appeasing and opening. Perhaps there will be some of it, but it are closed door meetings. So unless Xi allows one of the bots to let something out, we shouldn't hear until everything is done and dusted, and then Xi should come out with a statement, and one of the many Lees in China should add their own comments. I'm a bit reluctant to believe that it's all going to be good and well. And I tend to agree with the market weighing a little bit on the China that they're having trouble over there, I think, to put in place real measures to crick everything up. I think it's just too big not to fail. Well, I mean, for the time being, okay? And I don't see the exact measures that they could put in place. Of course, they have like a gigantic amount of money still behind them to do stuff. But so far, we have seen all those measures failing to revamp everything. And with the especially political side as well, because we have seen EU as well sticking tariffs on Chinese EVs and Trump, or whether it be left or right. I mean, in the US, they will continue to put slam tariffs on there. I'm a bit afraid that the Xi may come out a bit more bellicose than what really trying to mend things on the international front. And I guess that's where I agree kind of with what the market is doing now, weighing on the Chinese yuan. So remains to be seen. But I'm in doubt that we are going to have a lot of positives coming out of that plenum on my personal view.
Yeah, it's a difficult one
Yeah.
for two reasons. A, this is obviously mostly for them and the country, so it's more a domestic tilted meeting. But as we've been saying for a while, you know, they've had a bit of international damage. You know, they've had a lot of people exiting out of Chinese stocks, as we saw with Chinese stock markets tumbling, and they do need to fix that relationship with international investors. Or because it's going to be a big drag on their economy if they don't. But like you say, that, you know, they've constantly said that they're not, the PBOC particularly, they're not going to resort to flood-like stimulus, is the term they've used. So, you know, we may get a couple of small rate cuts and a change in RRR, but they're not likely to you know, jump into QE like everyone else. And I guess it's a question of how bad things are really over there. I mean, you know, yeah, GDP dropped this weekend, but it was still 4.7%. I mean, you know, there's countries in most of the developed world that would bite your hand off for half that number.
Yeah, but over there it's about size and keeping the machine going, because they are in need of a much higher GDP growth than in some other countries to keep the ball rolling. So yeah, it's a bit difficult to compare 5% in China with, let's say, 5% in the US, like we had in parts of 2023. But yeah, they could come out with a bazooka. Why not? But it's I still want to see it. I really still want to see it. The issue for the West now, buying into what China wants to do, is that for the time being, on the geopolitical side, we are not yet starting to turn back to China. We're still moving away from it because of those fresh tariffs that the EU put on EVs and things. So yeah, we could be in for it's going to be interesting. At least I think it ends on the, what is it, the 18th? I think it's 15-18. So on the 18th, by the time we walk in, we may have already some comments. So that's the day after tomorrow. It's going to be interesting on the Chinese yuan, at least at the end of the week. Yeah.
Yeah, pretty much so. So yeah, all we can do is sit and wait for headlines to drop and let the market do what it wants to do in between. Right, let's look at some prices and what's going on elsewhere. Ali, what you up to today, mate? Your long gold at market 24.37, stop at 24.23. Doke, I'll leave gold for Kay to have a look at. Cable was very interesting. Heard this morning that we got barriers up at this 130. That explains the price action. I wish I knew that yesterday. I had been tempted when we were running up to it to try a little 95, 129.95 short. I mean, we didn't get there anyway by half a pip. But the price action was smelling like there was some sort of defence up here, and I had it confirmed that there's barriers in play at 130. I'd be wary if we do get another move up towards this area. You know, there's only so much pounds in the defence pot, shall we say, for barriers before it gets chewed through, and then we get a break. So the longer we just sit below it, testing, the greater the chance is that we will get a break. And then we'll probably see some stocks going, and it depends on whether we actually kick on or whether we just get a bit of a poke through and then reverse. On the other side, if we don't get through this 130, then we're probably going to get a growing risk of a steeper pullback, maybe down to the 129 figure or this sort of area down here again. But I don't think cable's going to collapse off of this level unless something happens in the dollar or something happens in the UK. But just price action would say if you keep trying and can't get through, those who keep buying it off this minor support here will then probably give up throwing the towel, and that's when you see a steeper pullback. So bit of two-way risk up here. Kay, your thoughts, because I know you're still long on this one.
Yeah, but I reduced. I really greatly reduced. Yesterday I was lucky to get paid out of some just in front of 130. I like when I'm long or short something to go just a little bit before the big figure, just in case, you know, we get a rejection. Also tomorrow the inflation data, Ryan, right? That can throw the sterling around a little bit. So that was the other consideration that I had to reduce. With your confirmation this morning about barriers, I reduced just a little bit more. So I'm really out of danger completely on my positions, which is always a nice one to be in. Yeah, so I think tomorrow we're having like two things to consider. I reckon for the cable we do have those US retail sales this afternoon. I've seen everything like better, worse, expected. It's just a lottery to me at least. That can put a bit of pressure on the 130. Then we will see if that defense is big enough. If in turn the retail sales coming better, we may see the dollar pick up a little bit, and then we are moving away from the 130. Then we have to wait for tomorrow inflation. And the other one, and I see quite a few people are in euro sterling positions. The other one is euro sterling. I think euro sterling here is just waiting for those inflation data tomorrow. I say yesterday as well, I wouldn't be surprised if we see some consolidation, even correction. And that's where we are in a wait and see. I mean, euro sterling has a 10 people so range today. Again, I would really wait for those inflation data to hit tomorrow to see if we can push further down, which if they are sticky, I think we will on euro sterling push further down. If they go into the direction of more softening or faster softening than expected, then I reckon we can have a retest of the 84.5 in the euro sterling before trying to decide what's to do next, right? So it's going to be relatively binary, those tomorrow inflation data, and I'd say perhaps more so for, well, of course, cable is going to move, but perhaps more so for that continuation of the direction in the euro sterling. It's going to be interesting.
Yeah, as you can see there, we are expecting CPI, headline CPI, to hit 1.9%. So that would actually put it under the Bank of England's target. And that I said it some months ago, it'd be typical, particularly for these guys, that they're too late cutting rates and then they see inflation going through their target and then they're all scrabbling on the other side. Same for the ECB as well. So that's, if we get something less than 1.8%, we're going to see cut expectations for August ramping right up, I think. But also that might be tempered a bit by this core number. If that core number comes down to something like 3%, and that's at something like headlines at 1.7, 1.8, then I think they will be very close to cutting at the August meeting. But if that core stays higher and that comes in roundabout expected, well, I don't know, it's a bit more 50-50, but we know there was enough BOE members at the June meeting close to voting for a cut. So it just depends how much they want to see the data swing their way. But we've got this data, we've got jobs data the following day, and then on Friday we've got retail sales. So we pretty much got the whole hat for the UK to make a decision for this August meeting. So from tomorrow, it's going to be on pound watch, definitely. So in answer to your question, Ali, is it time to break? Maybe, maybe not. We shall see. I still think whatever happens if the market ramps up expectations for a cut on in August and the data is a bit softer, I still think cable might still be a dip buy, just because of what's going on in the dollar being the bigger part of that trade. But yeah, coming back to euro sterling, yeah, not doing an awful lot. Imasho, you're short as well. Not sure where you're short, mate. You still holding yours, Kay, from up?
Yeah. But I did the same as in the cable. I reduced it.
Yeah.
I'm running at a third of the original, and very happy because it went my way, and I'm also let's say out of danger, because I think I'm going to monitor what's happening around 84.5 if we ever get there, and I'm going to monitor cable just what happens around 129 figure a quarter. So it's just now let the data do the talking, and then we will react. Of course, I think that if really we get a low ball on CPI, I'd say watch out, because the market, as we already said so often, tends to get a little emotional about sterling, and I trust the market is long sterling. After the moves we have seen, we did see give and take a 350 pips rally in the cable from those 126s. The market must be long. We've got that big break from we've got that big break in euro sterling retest coming down. The market must be short euro sterling. So watch out for those inflation data, I would say to all our viewers.
Yeah, very much so. And but then be careful with the rest of it, because we get a hot wages number in the jobs and we probably go the other way. But that's why I think this week's going to be good for data, because, yeah, you know, we've got Canada data that's not really going to be, you know, offset by another piece of Canadian data, you know, 5 minutes after. But for the pound, we've got data after data after data. So CPI will be the more important one. But yeah, for euro sterling, we're just sitting above 84s at the moment. 84.20 has been the sort of protective support when we've come down here. And then we've got this 83, 85 just below. So we're pretty much in the middle, 84.20s, 84, 83, 85s. Look for direction either side of those. Brian wants me to have a quick butchers at Aussie Kiwi. This one I got put out my short. I was trying shorts up into the resistance up here. Tech areas I've got. The break is breaking, or the break is on, should we say. So at the moment, there's no real reason for this trend to change. There's enough going on. We've got, is it tonight, Kiwi inflation? I think so.
Yeah, correct.
So that's going to be a big one, because if it comes in softer, much softer than expected, then you're going to see Kiwi getting sold off. Where is it? I can't even find it. Oh, I'm looking at Friday. That's why. Might help. There we go. So this is quarterly inflation. Okay, they don't run a monthly thing like the Aussies started doing. So this is going to be pretty significant. Again, I think if we're down at 3%, below 3% in the headline numbers, you know, even softer on the quarterly numbers, then the market's going to ramp up cut bets. And with the RBA now, the one looking a bit more hawkish, probably going to see this one going up even further. I'm not looking to trade it much anymore at the moment, but we have got a level up here in the high 111s. Been an old sticky point, and then as we get into the 112s. So, yeah, data driven. This one. Where's the top going to be?
Especially the night after for us, we have the Aussie unemployment data.
Yeah, that's true. And
like a bit of a double whammy there on the Aussie Kiwi if you're not careful. Huh?
Yeah, it could. This thing could just keep going, and it's done that before. You know, it's one of these pairs that when it starts to move, it goes for a bit. So yeah, I don't know where the top will be in here. Maybe if we get cemented cut expectations from the RBNZ, I can't see the RBA cutting, given what inflation is doing globally. I know they're worried about it. Sorry, I can't see the RBA hiking, given inflation globally and what it's doing generally. So yeah, maybe if that's confirmed from the RBNZ that a cut's coming, that might signal a bit of a top. Obviously, depending on what the RBA wants to do after that. Yeah, let us know what your thoughts about it are, Brian. You're long, you're short, you're looking to hit the top, or you're trying to buy a dip. Let us know what your thoughts are and what you think of those two central banks as well. What else? Looked at dollar China. I think I'm going to bang it over to you, mate.
Did you look at the dollar China?
I did right at the start. I can have another look if you want.
Yeah.
Just before we bounce it over. I've just actually taken a little bit off my long. I'm long 27 and a half, and I've just lipped a bit off at 28.30 just on this move because we had one before after the Trump stuff, and I don't know how far this is going to go, but I've decided that it seems like the mood's changed. I thought we were off and running with the Chinese, allowing the currency to weaken further. I thought we might be off and running. And so I've got in again on the dip, but it's looking a bit mixed at the moment. So I'll just keep slicing as we go higher. But yeah, this 28 level is a pretty big pivot level. If we start to hold above there, then maybe we're going to kick on to those highs. You're short 110.75 in Aussie Kiwi, Brian. Okay, mate. We'll take care of that one. He's looking a bit strong. As I say, I'm out my shorts now. Because it's looking far too strong for me. Kay, what do you make of this dollar China then?
Well, 726, 731 for me, and got decent levels both sides of the range, hanging in the middle, and that'll I bought it as well in the 726s, and just because I'm a little well, I mean, it's still geopolitics. It's still the tariffs being slapped on. It's still even the Trump trade. If there is a Trump trade to be had, is going to be negative. But even if Biden stays on, it won't be better. I still think that, and also looking at those PBOC fixings, and then finally, I don't think that the plenum is going to do anything spectacular for China. And before the thing turns, I guess we have a look back at 730, and then we'll see from there.
Yeah, very much so. Right, I just want to have a quick look at stocks just very quickly. I know Kay's trading this at the moment, but just because I constantly hear everyone who wants to try and pick tops and try and guess where it's going to tumble 500 pips. We're still in this situation. Okay, we're still in this uptrend. We had the potential for a top here because we had these two definitive highs, 11th and 12th. Okay, still very short term. So that was the level to watch. But then we went and broke it. Okay, so we're still willing to go higher. That's your first thing. And remember, this is only on a 15-minute chart. This is very short-term price action. I'm not saying what's going to happen over the next 6 months. This is over the next few hours. So we've had a pullback. It's come back down to a minor support area. We've been mooching around it. Just watch this area here. Okay, if you want to try and pick a top, if you get up here, if we see the price get up here and it doesn't get through, that will say that this is probably just a bit of a blow through, bit of an extension. But if this solidifies as a top again, then you've got something more definitive. So if you want a short, wait for the evidence, and the evidence might be if we hold up here. Where it pulls back to after that, that's down to you to decide if you're in shorts. But we've got some minor levels coming down to the big figure. Worry about those first. Don't worry about it going to 5,500. Worry about all these little bits of support and resistance that build up through this rally. If we go above there, then I think you've got to be careful. Watch this high again because it may set up a similar thing to what we had here. If you are trying to trade this from the short side and keep getting caught out every time we break higher, keep your trades tight. You don't need to be 30 pips offside to know you're wrong if you're trading against these levels. 10, 15 at most. Okay, keep your risk tight, keep it light, keep your trade smaller. You are fighting a very strong trend. So if you're going to piss in the wind, make sure you got a rain mac on. Right, Kate, over to you, mate.
Okie dokie. I'm going to straight away go into gold. A lot of people are inquiring about gold, and yes, it is going. It does, unless you want to be in Bitcoin. We don't really trade it. So the traditionals amongst us, I think they are buying gold. Gold looks to be the expression now, I mean, or one of the major ones, to express a feeling of lower interest rates to come, geopolitical uncertainty, the dollar being a little under pressure, and it seems to all come together. And then you add the technical aspect to it, as we can see when it broken above this channel. It tried a couple of times to get below again, but it failed. We were looking, and I was looking at that very, very closely, that this 2290, 2280 zone. And I remember at the day as well where we were trading below, I had the cloud on as well, and that was also just between below 2300. And since then, people know I've been buying it. As usual, how I trade my positions around. I've been selling a few on the way up, also this morning, and yeah, Ali, and again, you know, as I was showing this morning, yesterday we had a bit of a pause, okay, but you remember what I've been saying. Three sessions in a row last week. We had Asia buying gold again, and what happened today? They again bought it up for $10, and that just adds to everything that's going on, in my opinion. And so whether it be technical, it's doing the right things to keep on being very strong. Also in the time sensitive trading, it's doing what I expect it to do. And if you look at all the fundamentals, there's still enough to keep it pushing. Now, is the music going to continue to play? That now remains to be seen. That's why I also like to trade my positions around. So I've been selling up in the 24s regularly. This morning as well, I'm keeping half the position open, and now I'm going to look with already what's going to happen. We had this little pushback below 24. That was on Friday, but it got rejected. Prior highs, 2388, 2392, bit of a trend line, bit of a fib as well in that zone. So now for me, as long as we stay above this 2385, 2395 zone, the music continues to play. That's how I look at it right now. Some people saying like perhaps a head and shoulders, but you know, good luck with that. I'm really not in that camp. I still think this has enough like coming together of many aspects to continue to go. It's only if and when I will see like several sessions that the Asia doesn't buy anymore, that we're starting to come back to those levels and seeing no bounce, that I'm going to get worried about the rest, and then we will see. But I'm long here and in this zone, so it's all going pretty cool right now. So this is what I think. Next levels, of course, that 24.5 that we saw the other back in May, that jump that we saw here is the level, and then we have to look at extensions, right? And if you look at it at those extensions, I've got one close to 2500. 2500 is going to be a psychological level, right? So this is something that we're going to have to take it into account. But if you look at it pure on technical basis, there is a little bit just before 2500 and then 25.5. It's probably not going to go in a straight line. There is going to be data coming out left, right, and center, so we have to be careful about those. But now we just can measure what we are doing here. If we get back down to low 24s, down to 2380s and stuff, okay, as I was showing. So this is really now the first zone of interest. For as long as we hold that, it's a little bit like Ryan was saying on the equity markets as well. If it doesn't go down, if those levels in between are not or are getting tested and we bounce from there, who are we to go and stand in front of the trade? Yes, it will go down one day. Yes, of course, we will see a top, just like in the equity markets, we will see one. But when is the next question? Imagine that we get like just soft retail sales this afternoon without really falling out of bed completely, but just soft retail sales. What do you think stocks are going to do? What do you think interest rates are going to do? They're probably going to get another couple of BPs lower, and then perhaps just gold and equities, they can go together in tandem higher. And as Matthew says, yes, the 420 on the US 10s, it is still a level, obviously. It's here, and yeah, I've even stopped drawing that line because it's really there. I would argue it may be just if you draw the line a little bit that we could say it's around 415 as well, but I do think 420 is a level now. Don't forget that there's a lot going on in the curve right now as well. So you could see a bit of divergence between the short end and then the longer end, okay? But the fact that the curve tightened or steepened, I would say, so the inversion tightened I'm not sure if we're done with it or if now the effect is just for rates to be a little bit lower. I'd say pricing in rate cuts is always, everybody is talking about, oh, two cuts, three cuts priced in. A lot has to do with this curve as well. I'm not going to stare myself blind on whether the market expects 2.5, or 3 cuts. As we know, the pendulum swings quite often. So, but keep an eye on what's happening at 415, 420, of course, in the US 10s. If it continues to go, then going back to gold and all instruments, it's going to continue. Okay. What else? Yeah, that cable, we showed it. Euro sterling showed it. Well, euro dollar, it's stalling around the figure. Still in that triangle. We will see on the retail sales what's happening. It is a bit funny that the euro is coming back relatively better bid. Also on the crosser side, if we look at the euro commods, if we look at the Euro Canada, for instance, is pushing higher as well. So this afternoon we are going to get a move here, and the Euro Canada is actually pushing up against interesting levels here around one. Well, it's shied away a little right now, but we are 149.20 around is a pretty decent level. It's the old top as well. So watch out for those Canadian Canadian CPI, sorry, data. If they would come in a little weaker, and if the expectations for rate cuts are continuing to ramp higher, this thing could trade 150 relatively quickly. Okay, so 149.20. Keep an eye on what's happening around there. Dollar CAD, did you cover it, Ryan? Not today, huh?
Yeah, no, go for it, mate.
Yeah, okay. Just quickly on that CPI. Yeah, we're coming back into those levels around 137, right? You got just above 137 the figure, then 137.30 and 137.5. Those are the levels to watch when the CPI will come out if it's a bit weaker, okay? If it's coming out a little stickier, it depends on how much it beats by. I wouldn't think that it's going to beat by a lot or miss by a massive amount. But anyway, then I think it's going to just consolidate this range here between 136, 135.90, and 137. And we're going to hop around because right now, Canada is also not helped by by what oils are doing. So perhaps a lower CPI is going to ramp those rate expectations up, and perhaps weigh more on the Canadian dollar than when we get like a just average expected bit of a stickier one. Then we just consolidate the range, I would say. And looking at the clock, that's enough for me today, Ryan. I'm going to talk about RAND and stuff like that tomorrow.
Thank you very much, mate. Thanks for that, as always. Yeah, we'll call it a day for today. Keep your eye on that data later on. Some potential good trading opportunities for that loonie as well. Have a great day, everybody. Trade safe, and we'll see you all bright and breezy tomorrow. Thanks a lot.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.